Hey, what's up, everybody? Today, November the 2nd, is going to be another big day in the markets, the stock market, as well as silver and gold, because the Federal Reserve and Jerome Powell is going to conclude their two-day meetings today, and I do believe at 2 p.m. Eastern Standard Time, or right around that time frame, they're going to announce what they're going to increase the Federal Reserve fund rate by. If you've been following the interest rate hikes all year long, you know that back in March of 2022, the Federal Reserve raised rates by 25 basis points, then in May by 50 basis points, June, July, and September, each one of those 3 months, they raised interest rates by 75 basis points. And today, November the 2nd, could be the fourth 75 basis point increase, or the Fed could go a little more hawkish. Let me know what you think in the comments below. Please remember to hit the thumbs up button on this video. They could increase interest rates possibly by 100 basis points, but I think the popular opinion is they're going to do another 75 basis points. But the question remains, has these rate increases done any good in their goal to tame inflation? And it doesn't appear so, but I'm going to be referencing an article from CNBC, because not only is today going to be the day that the Federal Reserve and Jerome Powell is going to announce what they're going to do as far as rate increases, but today we also found out about job numbers. Per CNBC, private payroll rose 39,000 in October, better than expected, while wages increased 7.7%. Private payroll growth held strong on October, while workers' pay rose as well, particularly in the leisure and hospitality industries, according to a report Wednesday from payroll processing firm ADP. Companies added 239,000 positions for the month, ahead of the Dow Jones estimate of 195,000, for a better than downwardly revised 192,000 in September. Wages increased 7.7% on an annual basis, down 0.1 percentage point from the previous month. If you've been following what the Federal Reserve Chairman Jerome Powell has been saying at his meetings so far, at least for his last couple of press conferences, and that is he's trying to soften the labor market. He's trying to, in my opinion, reduce job positions and job openings, and also reduce wages. Job gains were especially strong in the pivotal leisure and hospitality sector, which added 210,000 positions, while wage growth accelerated 11.2%. The industry, which included hotel, restaurants, bars, and related businesses, seen as a bellwether as it took the hardest COVID and still below pre-pandemic levels. It seems like a lot of the jobs that were added were more low-level jobs that are absolutely needed. All the job growth came from services-related industries, which added 247,000 jobs, while goods-producing sectors lost 8,000 jobs, due largely to loss of 20,000 manufacturing positions, which is not very good in my opinion. Trade, transportation, and utilities rose by 84,000. Per the ADP chief economist, Neela Richardson, this is a really strong number given maturity of the economic recovery, but hiring was not broad-based. Goods producers, which are sensitive to increased rates, are pulling back, and job changers are commanding smaller pay gains, while we are seeing early signs of Fed-driven demand destruction. It's effectively only certain sectors of the labor market. The Federal Reserve has been raising rates in effort to cool inflation. Is that working? I don't think so. Running near its highest level in more than 40 years, the primary aim is the historically tight labor market, where job openings outnumber available workers by nearly 2-to-1 margin. While the headline ADP number was strong, the details looked weaker. Along with a decline in construction jobs, information down 17,000 positions, Professional and business services down 14,000, and financial activities down 10,000 also showed losses. By business size, companies with between 50 to 249 employees had virtually all the gains, adding 241,000 jobs. The ADP report comes 2 days before the more closely watched non-farm payroll count from the Bureau of Labor Statistics. That report is expected to show growth of 205,000 from September's 263,000. So let me know what you think in the comments below. Please hit the thumbs up button on the video and let me know, what do you think we're going to see the Fed Chairman Jerome Powell do today? Is he going to raise interest rates by the popular opinion, and that is 75 basis points? Does he, for the first time, raise interest rates by 100 basis points? I do believe he's going to probably opt for the 75 basis points, in my opinion. Let me know what you think in the comments below. I appreciate everybody for watching. Like, comment, subscribe, share. I'll talk to everybody on my next video. Thanks a lot, everyone.